Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market has set its eyes on the level of 22,200, it seems, because we're quickly running towards that mark. So, of course, it's fresh record high for the market, 22,186 right now. And the momentum just keeps on building at the moment. So, clearly, that 22,200 in sights. Bank Nifty is of course doing quite well for itself, no complaints there, but the index is almost 2,000 points still away from its record high level, so quite a bit of ground that Bank Nifty has to cover. The mid cap and the small cap indices are also holding up in the green comfortably so, and it's actually individual names which are actually managing to show very strong gains today. Case in point being MRPL, that stock is up 19%. The other oil and gas name that you should have on your radar is Chennai Petro. That stock too is up around 9%. And then Supreme Petro was the other one which saw a good amount of volume since the start of the trading session. You also have a Policy Bazaar which is up a 9%. So, of course, IRDAI had given the composite license to a PB Fintech that allowed them to get into the reinsurance business as well. The street is excited about that. We did see brokerage notes come by from Morgan Stanley, Citi, etc., calling it a positive for the company. So clearly that factor at work there. Adani group of stocks are also perking up. Case in point being Adani Wilmar, that's up around 7% right now. On the losing side, of course, there are some losers. Take a look at HDFC EMC. That's coming under a lot of pressure, and even Motilal Oswal for that instance. So a few of these, stock market intermediaries, if I can call it that, are under pressure. Home First Finance is the other one. So lots of pockets which are doing well, but again, there are some losers. But I think pretty much it's a bull market right now.
Oh yeah, absolutely, no doubt about that. While from the frontliners, there's a Bajaj Finance, ICICI Bank. Both those stocks holding up about almost 2% as we speak right now. ITC, ONGC continues its up move further. Reliance participating in today's move. You've got Maruti, Bharti. They're all holding up well, as are the Adani names. But TCS still lackluster. Hero MotoCorp flat. L&T down about almost 1%. LTIM down 1%. And Axis Bank as well, which is trailing in the rear as we speak right now. So yes, it's not like a across the board move that you're seeing. You're also seeing some profit taking for names like a HAL, for instance. That's down about almost 2%. Z is down 3%. There's Lupin, which is down 2%. And then HDFC AMC as well, which is cracked about almost 4% as we speak in trade right now. Manappuram Finance too added to the list of losers, which is down about almost 1.5% as we speak. There's Minda Corp. Sources are telling us about 4.5% of equity which has changed hands via block deal, and who the likely buyer and sellers are. There's Quest Corp, which has been in focus, split into 3 entities. We'll play the management sound bites as well shortly. And then, of course, Nuvama is saying that from the current levels, there is limited downside potential and strong value unlocking is what they foresee now post this demerger which has got announced. So, a bunch of these stocks which are in focus this afternoon. Let me now welcome on board Sudeep Shah as well as Naresh Mirani and find out which way the market is headed next. And Nisham Maheshwari too joins in on the fundamentals. Naresh, if I could get in a quick word from you. While for the Nifty, in blue sky territory, we're at an all-time high. But when will the Nifty Bank play catch up, you think?
So we are getting the first indications of Nifty Bank playing a catch up. We are seeing ICICI Bank come in touching distance of an all-time high. Now, in the Bank Nifty, the two largest weights are HDFC Bank and ICICI Bank. That comprises almost 50% of the index. We've seen day before and yesterday a recovery in HDFC Bank. And now if ICICI Bank takes a lead, because if it breaks out about 1,050, an ideal move would be closer to 1,150, 1,200 on that one. So if that happens, we take that dash towards 48,000 also on the Bank Nifty. So overall, HDFC Bank and ICICI Bank both look promising, and ICICI breaking 1,050 would be a new all-time high. So that would be a clear leadership move. So expecting banks to take leadership once we get a confirmation from ICICI.
Waiting for those banks to take the lead. But Sudeep, if I can come to you on auto stocks, auto index was itself sitting at record high level, and then we saw a lot of these individual names also moving around. Today, of course, you also have Bajaj Auto, which is reacting to that record date that they have announced for the buyback, which stands at February 29th. Which stocks do you think have further steam left within the auto pack?
Good afternoon, Anisha. See, what I feel is that auto index, which has broken out on Friday above its previous all-time high, we are seeing the the move consolidating and strengthening even at higher levels. And with the likes of Maruti, Bajaj, Auto both outperforming today, I feel the outperformance in both these names could continue going forward in the next week also. And specifically, if we come to Bajaj Auto now, the charts are quite stretched there, but the momentum is upbeat. So I feel that dips towards 82, 80, 8300 in the next few sessions should be used to go long from a trading perspective. From a positionally, from an investment perspective, I feel there should not be any heavy there should not be any from the current levels. I feel it could witness some kind of sideways action. So I feel the dips should be used from a long term perspective, but from a trading perspective, 8300, 8350 zones are a good level to enter.
Okay, let's welcome on board Nishal Maheshwari as well. Nishal, hi, good afternoon. Good day for the headline indexes, but just wondering when you think the banking rally is going to make a move, and especially the underperforming private banking names. You think the worst could be behind and these dips should be bought now? Case in point being an HDFC Bank.
Afternoon. Yes, I think it's been quite a wait actually for banks to perform. It has been at these prices. I think they are all screaming by. I would say use the word screaming. I think whether it is HDFC Bank, ICICI Bank, I think the performances have been pretty strong. As far as the macros are also concerned, I think they are also behaving very well. So yes, I think so. Banks are a good place to be in.
Are a good place to be in. But what about platforms like PB Fintech? Of course, Paytm is a bit of a dangerous bet right now. But apart from that, Zomato has been seeing good amount of commentary coming from the brokerages. The management is fairly positive. And for PB Fintech, there is this added boost of the composite license as well. Like anything within this space, Nishal?
Yeah, I think both these stocks basically, which we are talking about, Zomato and PB Fintech, that's been my favorites basically in the whole space. And the logics have been basically that both are market leaders, and it takes a lot of time and effort and money to actually get into these kind of pole positions for both these stocks. Very clear business model, very clear revenue streams. And I think with after they got listed, they became very clear about saying how the profitability is going to get achieved. So I think market is definitely rewarding them for that. Other, I think Paytm and all, I think one has to get its arms around basically, especially about the business model itself.
Right, okay, that's the take coming in on Paytm. In the last 3 months alone, the stock has lost about almost 60 odd percent. That's what the data is indicating. Just looking at a couple of movers today, there's Delta Corp, which is up about 5%. There's Balrampur Chini, which has made quite a breakaway move, almost a 5% tear coming in there. Dixon is holding up 4.5%, JMR Infrastructure, and then Grasim is the one which is scaling up quite nicely in trade. Naresh, let's get you in on the charts of Balrampur Chini, considering that seems to be the leader amidst the sugar pack. Of course, there's trigger why you're seeing the move on the stock, but what's next on the cards on the charts?
So Balrampur Chini has been sideways for the last almost 2.5 years. The stock used to be 400 back in 2021, and we are still struggling around the 400 mark. In between, there was a dash above 440, and post that, the whole sugar sector topped out. So as of now, till the time it doesn't start sustaining above 400, 420, the trend remains sideways only. So Balrampur Chini would still wait it out. I think we are still not out of the sideways trend for sugars as such.
Of the sideways trend. But Nishal, what about OMCs as a space? Of course, the likes of HPCL, IOCL, BPCL have seen a massive re-rating, and now the end of the curve names, the likes of MRPL, Chennai Petro, these stocks are also reacting. Supreme Petro. Do you think there is a bit of an over-exuberance now, given the kind of undervaluation or that these sectors and stocks were getting? This kind of re-rating was just on the anvil.
So yeah, I think so. Basically, I think it's a good time to take away profits from most of these companies. Yes, oil prices are benign, and that's why you are having this kind of margins in the products. But there is no clarity, basically, if and when the oil prices goes up, who bears the losses? So I think these are all good trading bets. I don't think so one should make them as a part of the portfolio. And I think this is a good time to actually take away profits.
Since you're calling it a trading bet, let me take it across to Naresh to get a sense as to one should make a bet into these names or not, Naresh.
Which names would be?
It's Chennai Petro, MRPL, and the other rest of the OMCs.
So time to take some profits, at least in the refiners like Chennai Petro as well as MRPL. They've gone up one way. They've continued in the momentum. Other hand, BPCL is something, BPCL, HPCL, for now, they could get into a pause. We may not see a sharper correction as such, but you want to be buying into this trend in BPCL because BPCL has broken out about 550, which was last seen in 2017. So out here, you want to be buying on dips closer to 550, 600. Whether we go there and test it would be a tough call to take, but you don't want to be looking at it as an exit on a longer term basis. Yes, in the short term, looking at a pause in all OMCs.
Right, okay. On that note, we'll take a very quick break. We're still holding up onto our gains, 22,250 on the Nifty futures right now. Smart positive breath led by infrastructure, textile, telecom, and oil and gas names. We'll take a break, continue tracking markets on the other side. Okay, some commentary coming in from the Coal India chairman as well, saying may miss the FY24 guidance. I'm not quite sure if I got that correctly. We will wait for those flashes in just a second from now. But Nishal, clearly the entire energy space, and I'm going to leave oil and gas aside of that, but commodities, yeah. So may miss FY24 production goal of 780 million tons by 10 million tons is what the Coal India chairman is quoted as saying. Just wanted to understand, Nishal, where is it that you stand within, say, metals, coal, the other energy pocket, ex oil and gas?
So I'm saying let's look at let's try and break it up. Yeah, demand wise, I think pretty strong basically because industrial output is increasing. We are looking at around 7% kind of a growth on the GDP. So definitely, I think demand wise, there is not much of a challenge. Now let's look at the supply side. I think there we are going to definitely see challenges actually because what all we are seeing right now, the orders being placed, all these production basically, especially on the coal-based plants, is all going to come in the next 3 to 4, 5 years. So we are that way more positive on companies basically which are more green oriented and are strongly betting on that. So something like a Tata Power, NTPC, these are as far as the producers are concerned. But even the transmission companies are our favorites. So these are the two spaces basically which we like. But I think the equipment guys have run much ahead of its course. So we would want to actually recommend saying take profits in Behel kind of companies.
Okay, so that's the take coming in on some of these metals and commodities plays. But Sudeep, if I can get you in and talk to you about the chart check for L&T, because that one is of course lower today on account of the news flow that Aramco might be taking back some of its bids. It was expected to be very beneficial for L&T because they were going to get a large chunk of it. That's not happening now. And let's talk a bit more about Coal India because that is continuing to fall as well. At what level would you be a buyer? Sudeep, the question is for you.
Yeah. Anisha, if we see the charts of L&T, the stock is in a downtrend since beginning of the month. Since February first week, we have seen the stock witnessing resistance around 3,500, 3,530 levels. And now it is even sustaining below its 20-day exponential moving average. Today also it has retested that, but it is unable to cross and close above that, right, as of now while we are talking. So I feel that the trend is still on the downside. One should not be doing bottom fishing in L&T. Wait for a dip up to 30 to 80, 30 to 70, which is the prior support from a medium-term standpoint. So 30 to 80, 30 to 60 would be a good zone to enter in L&T.
That's a take on L&T, Coal India and some of the other big buzzes as well. In the meantime, just taking a look at some of the other gainers from the broader market. Take a look at JBM Auto. That's seen quite a bit of spike of late. Rajesh Exports is the other one that has been coming up on radar often time again. It's up 15% today. Walker is up around 13%. Force Motors is the other one. But just taking a leaf out of that, Nishal, Pharma as a space has done very well in the quarter gone by, surprised quite a few people, saw quite a few upgrades as well. Do you still believe that bulk of the rally is left, or or you're a bit too late to get on the bus now?
No, I think basically the easy money has got made in pharma. So the thing that US has started doing well. So all the companies basically they are getting price increases out in the US, and I think for a couple of quarters now that is showing up in the results. So the easy money, the turnaround in pharma has happened. Now you have to go very, very stock specific. And I think in case of definitely there is a lot more opportunity as far as some of these stocks are concerned. So we prefer the domestics more than the international names. And obviously, though I think Sun has been a top pick, and that continues to be both domestic as well as international, continues to be doing pretty good. The other space which we like within the pharma or a broader healthcare space is the hospital. I think that space is doing pretty well and has a very, very strong visibility.
Domestic Sun Pharma, of course, has clearly been a favorite and has done quite well for the investors as well. But Naresh, I wanted to come and talk to you about, let's say, a JBM Auto, which is up 15%, Force Motors is up 12%, and you also have Electra Green Tech, which is perking up quite good on the charts. And add to that list maybe a couple of other names from the pharma space, from the auto space as well. Within these names, what is your top bet?
So, out of these names, at least in the JBM Auto and Electra, it would be time to actually book profits because there are no more small companies. They've all become 25-30,000 crores market cap after the move, and overall seems like an over participation in the near term. So that's a time to book profits. In terms of pharma, clearly Dr. Reddy's is the new leader. We've seen that move happen in Sun Pharma. Now Dr. Reddy's is a breakout, so that would be the first one. Second would be to look at dips in Granules India. That's given a breakout into new all-time highs. And third would be to look at a basket of smaller names like Alembic Pharma or Natco Pharma on dips, because those have also given structural breakouts. So we are seeing a shift in terms of the leadership in terms of pharma. It started off with Aurobindo, Lupin taking lead from the bottom and continuing well. Then we saw Sun Pharma, and now it could be Dr. Reddy's, which could take pole position, and then the rest of the names.
Talking about Dr. Reddy's, Nomura had actually written a note on it today. Remember, there was that entire news flow over the weekend that Novartis's India business has been put under strategic review, and there were reports doing around that Dr. Reddy's could be one of the strong contenders to pick up this business. Nomura, for instance, believed that it would have made strategic sense for Dr. Reddy's to pick up this stake, even though the valuation is high. The value accretion will be there in long term, driven by the cost reduction and already the partnerships that the two company has. In fact, let me bring on board my colleague Shrishti as well to explain to us what exactly is happening at Novartis, and could Dr. Reddy's really be a pole contender for this one. Shrishti, take it away.
Well, yes, indeed. Dr. Reddy's has come out with this clarification, but the parent company of Novartis, that is Novartis AG, has come out with a notification announcing a strategic review of its Indian subsidiary, that is Novartis India Limited, wherein they currently hold a little over 70% stake in Novartis India, and they do mention that they are assessing the shareholding of Novartis AG in Novartis India Limited, and the strategic review will include the assessment of the shareholding, though there is no assurance that the strategic review of Novartis India will be completed in 2024 itself. And definitely the media reports are suggesting that Dr. Reddy's is in the race to acquire the stake in Novartis India. But Dr. Reddy's has also clarified that there are no such events as of now which needs a disclosure, and they would not like to comment on market speculation. But Nomura has come out with a note saying that this could make a sense for Dr. Reddy's, and they do see a strong possibility of Dr. Reddy's pursuing Novartis India. Dr. Reddy's is best placed place to acquire Novartis stake in Novartis India. Why so? Because they already have an existing distribution partnership with Novartis India, as well as for the upcoming brands, this could make a strategic sense for Dr. Reddy's. Other than that, they do mention that the valuation though is high as of now, but the value accretion will be driven by the cost reduction, and if at all they further go with some acquisition in some of their brands, this would strengthen Dr. Reddy's India portfolio, as well as would get additional brands in neurology as well as oncology space. They also mentioned that all these products could be a low margin product, but the volume could drive the business for Dr. Reddy's, and that's why they have come out with a note and said that this could make a sense for Dr. Reddy's as of now, but the company has denied that there are no such events that needs a disclosure at this point in time, and that's why both the companies are in focus. But it's clear that Novartis India is on the block and there could be some players coming in.
Okay, thanks Shrishti for that. Take a look at Yes Bank. There is a big block that has happened there perhaps because the volumes have suddenly perked up on Yes Bank. The stock has actually moved lower, so maybe a bit of a large transaction is what has taken place. We'll try and get more details if it's actually true or not. But Nishal, do you track this one closely, Yes Bank? Because if I pull up a 1 month chart, you'll see that there has been great traction and buying interest on Yes Bank, but a few overhangs as well.
So, no, we don't cover it basically, but we have done some work earlier basically, and doesn't seem to be going anywhere, if I use that. It's at a 4.4% ROA, and I think our best case scenario, basically, we try and work it around. It should be like 0.7, 0.8% ROA in the next 3 to 4 years. So I'm saying at these prices, it's already, I think, 2 or 3 times book. So it's difficult to actually take a call on Yes Bank at these prices.
The view on Yes Bank has already run up quite a bit. So now just be very careful if you're taking further bets on that one. Thank you, Nishal, for making time and speaking with us. In the meantime, let me quickly take the closing trade ideas from our technical guests, Sudeep as well as Naresh. Sudeep, you go first.
Yeah, so the first trading idea would be GMR Airports Infra. Now, we've seen the last few days the stock consolidating at higher levels between 86 and 89. And it was kind of outperforming the other mid caps when there was a last week, there was some fall in the mid caps in the beginning of the week. So here, once again, the stock is doing well on the daily as well as the weekly charts, and it's sustaining above all its important moving averages right now, as of now, while we're speaking. So I feel the stock can be bought with a stop loss of 89 and a target of 99 on the upside. The second stock would be from the cement space. Now, last few sessions, we have seen the cement space doing really well. We have one by one, we have seen ACC, Ambuja, all these names doing well and breaking out of their consolidation. So now we are expecting Grasim to do the same. Grasim has been in a consolidation phase since last 3 months, and today we have seen some addition of open interest on the long side, as well as the volumes are pretty much high in Grasim on the long side today. So I feel the overall structure is intact. The charts are good on the daily as well as the weekly time frame, and this stock could be bought with a stop loss of 21.30 on the downside and 22.40, 22.60 on the upside could be the potential targets.
Taken, but quickly let me take it across to Naresh as well. Naresh, I want your view on Yes Bank specifically, and then your BTST ideas.
So Yes Bank, the view is we've overdone in the short term, and the current price does not signify what sort of market cap it has come. At peak, it went to almost 95,000 crores market cap at 32 levels. And this is the market cap which it had at 400 rupees pre the fiasco without the dilution. So it's at a market cap which will not make sense going forward in terms of returns. And we've already gone to those levels. So it's an avoid at current levels as well. ICICI Bank is the closing trade which I look at. The stock is very close to making an all-time high. Over the last 2 months, it has made multiple attempts around 1,040, 1,050. Sustaining about 1,050 would be a quick breakout. So looking at a target price of 1,090 to 1,150 in the short term.
In on ICICI Bank, time now to slip into a very short break. Don't go anywhere. Last 30 minutes of the trading session coming up right next.
Welcome back. You're watching Closing Trades on ET now. Nifty as of now 22,130 levels is what it is at. Off the day's highest point, but yes, did manage to touch that all-time high level today for the Nifty 50. So that's interesting to watch out for. But let's bring on board Pawan Parekh, a director and fund manager at Renaissance Investment Managers as well. Pawan, very good afternoon. Thank you so much for joining in with us. And let's talk about Nifty hitting the all-time high levels today. What's looking attractive? Still going to be looking at the large cap space now?
Yeah, hi. So if you look at macro and domestic factors, I think there's hardly anything to complain about. And in that light, markets are hitting an all-time high. But I must tell you, at this point in time, except for say select names in the banking side or the FSI side, you've hardly got any valuation comfort as far as the broader market is concerned. There could be few bottoms idea here and there where you can find good balance between say risk and reward both in terms of earning growth and potential for P to re-rate. But otherwise, if you see valuation is a very big concern, and in that background, we are happy to have a higher allocation to a large cap, and in our mid cap, small cap funds also we are happy to have higher allocation to mid cap versus small caps. And I mean, it's a little confusing state because all the macros are pointing towards a positive movement, but valuation comfort is not there. So we're trying to hedge our bets in a manner so that if the market correct, we've got companies with strong earning growth, and in that case we can potentially outperform even in a potentially falling market.
Exactly that. That's a million-dollar question. How are you hedging your portfolio? Which spaces, sectors, stocks still, look interesting in the sense of risk reward?
Right, so I think we are increasing our bets on the BFSI side. I think last 6 months there's been a decent correction out there. This is one sector wherein earning growth certainty is high, valuations are comfortable. Apart from that, we continue to be very positive in the IT sector. I think once again we stick our necks more on the large cap side on the IT side also, because if you look at a lot of these IT companies, they have got some large contracts which would help them in terms of growth for next 2-3 quarters. And in this next 2-3 quarters, we would want to believe that globally also things should be a little sanguine, wherein the overall momentum in terms of new order flows and execution should also pick up. We are also very positive on pharma, because pharma, if you look, I think that's a positive both on domestic side and on the US side. Over the last 3-6 months, we've seen price correction has been arrested, or should I say that the acceleration in price correction trend that we were seeing that have actually come down, and domestic market is a steady market of about 10-12% growth. And apart from that, we are also liking a few tech names. I think they've corrected quite a bit over the last 6-9 months. So those are essentially the sectors we have actually positioned our portfolio heavily.
That's the word there. But, let's just mark the flashes that are coming in on your screen. We did speak about that before as well. And that is Coal India's the stock I want to mark. It's down 4% as of now as well. Obviously, the company did say that they may miss their FY24 production goal of 780 metric tons by 10 metric ton. Other than that, the e-auction premiums have fallen from 115, 120 levels to around 45% levels in Q4 as well. 40 to 50% of the premium can be the norm at e-auctions, as that's the word coming in from agencies as well. But yes, because of that, we've seen a sharper fall coming in. If you see the stock price right now as well is down almost 4.5% as well. Request the producer to pull out the stock price as well. They furthermore said that to offer 15% of Jan to March production through e-auctions, the company will bid for critical mineral mines in India as well, but they will be missing their FY24 production goal also as well. And that is why the sharper fall that we've seen coming in as of now on Coal India. Also look at it at the day's lowest point as of now. That's Coal India, that is there on the charts as well, lowest point of the day as of now. But Sudeep, let's just talk about a few more stocks that I want to highlight as well. And, in terms of when you're looking at the railway pack, are you still finding these railway stocks attractive? Today also they are running away in trade as well, Sudeep. Whether you look at an RVNL, IRCTC, IRFC, all of them are buzzing away in trade. So what's the word on that, Sudeep, on the charts?
So while there was an early morning gush in the railway pack, but throughout the day from higher levels, we have seen these names cooling off a bit. So I feel there could be some more consolidation that we could witness in these names, whether it is RVNL, IRCON, RailTel, RITES, IRFC. all these names, if we see, are witnessing some kind of pressure from higher levels and not able to sustain the intraday gains also. So I feel we could still see some more consolidation into the railway pack, and uh, that is specifically where all these stocks are. If you see the February 9th candles, and most of these, they're not able to cross that particular highs. So I feel there could still be more consolidation going ahead on all these railway names.
Consolidation to continue, but just take a look at some of these insurance companies. While PB Fintech is clearly excited about the composite license it's going to get, which will open up the doors for the reinsurance business, you have HDFC Life as well as SBI Life, which are coming under pressure. So divergent moves there. The other stock on my radar is HDFC AMC. That stock is down a solid 4%. And then, of course, you have other names as well, like CRISIL, which is actually performing very well for itself. Usually, we don't see high volumes or big moves on CRISIL, but today that stock is reacting because the earnings commentary post its results as well has been quite impressive. Naresh, on the charts, CRISIL, HDFC AMC, these couple of these insurance companies, HDFC Life, SBI Life, would you be a buyer on dips?
So the top favorite as of now would remain SBI Life because that's the one which has been an outperformer in the insurance space. It hit a new 52-week high and all-time high yesterday. And now the stock has dipped back, giving a good entry point. So that's the first one. SBI Life looks interesting. In the rating space, Care looks promising because the stock has been a good uptrend, consolidated well, classical higher top, higher bottom formation. Today also made a new 52-week high. So that's a stock which could slowly and steadily continue in this trend. And the stock had topped out back at 1700 in 2015 to 2017. So there could be a slow and steady catch up with CRISIL in this stock. So out of these names, I would go with SBI Life and Care Ratings.
Okay, that's the word there. But, Pawan, I'm going to come to you. The overall EMS pack, when you look at the EMS sector, that's been picking up a lot of pace. Interest is coming in over there a lot. Even the government is pushing for these companies as well. Whether you look at Dixon Tech, Amber Enterprises, Keynes Technologies, Sirma, are you finding that very attractive? Would you still want to look at these companies because they've already seen a very good run up? But, in terms of when you look at the companies' commentaries that come in, they are expecting a further growth in terms of fundamental wise as well. So what's your view on this EMS pack as a whole?
So yeah, very clearly, in my opinion, EMS is a sunrise sector in India. I think whatever the stocks have done, I would actually firmly believe, take a 5-10 year view, you will have multi-billion-dollar large cap emerging from this sector. We've just seen the tip of the iceberg. Though I still agree that the valuations across the board here look a little expensive. But I must also highlight that this is not a sector where you will see linear growth. You will see step jump growth, and in that respect, if you see, a lot of these companies would look so very expensive. So classic case is one of the companies like Dixon, which we own in our portfolio. In terms of mobile segment, it is not a business which is growing at a linear pace. The moment they add one new customer, straight away 3 to 5,000 crores of incremental revenue gets added to the top line. So I would request investors and analysts to look at this sector not from a linear point of view, but from a step jump growth point of view. And in that respect, if you say take a 10-year view, I will not be surprised that the industry is at least 5 times bigger from where we are, and the value addition also increases tremendously over the next 5-10 years. So I think this is a stock wherein obviously on the headline basis valuations look a little expensive, but if at all anybody is not convinced, it should be bought at every dips.
Dips, that's the view coming in, and of course some of these electronic manufacturing companies are set to be the large caps of tomorrow, and multifold growth is expected. At least that is the view coming in from Pawan as well. Pawan, I remember earlier ICICI Bank was one of the favorites within the BFSI pack, but have you broadened it a bit, either in terms of the PSU banking names or the second rung banking names, the IDFC, the Yes Banks, RBLs of the world?
No, not really, not really. We are actually sticking our guns to those same names. Just that we've increased our allocation a bit on HDFC Bank, and at the same time we increased our allocation to SBI. I think that is what we've done largely on the BFSI side as far as we are concerned in the last 3-6 months.
Latest addition in terms of where you have put money to work. What is the cash level that you're sitting on right now? How are you going towards your portfolio allocation at this time, at this point of time?
So at different points in time, the cash levels in our portfolio generally between 3 to 6%. We are not amongst those funds which create large cash on the portfolios unless we believe that we could see a big meltdown in the markets, because we believe India is a large growth market, and in that kind of scenario, if you end up having say something like 15, 20, 25% cash on your portfolio, a month wrong can actually create a big drag on the portfolio returns. And if you look at the current situation, as we discussed just about a couple of minutes back, if you look at macro scenario, both domestic and globally, all the figures, point out towards a better, say 2024 as far as geopolitics or political scenario or fundamental scenario, inflation scenario, interest rate. So, I mean, just to summarize, macros look good. So, what we're not amongst the camp which would create large cash on the portfolio. We would rather want to have more defensive in the portfolio if we think the markets are overvalued, but we're not in the favor of creating large cash in the portfolio. So, we are about between 3 to 5, 6% of cash in our portfolio.
Okay. But, last week also, let's just listen into what Ester Industries chairman Arvind Singhania had to say. He expects a bounce back coming in the specialty polymer business as well. So let's go across and listen into what he had to say in terms of the trajectory for the next few quarters.
We are going through certain downturn right now, which is more capacity overhang related as far as the film business is concerned. And as far as the specialty polymer business is concerned, it's only because of the downturn and recession in Europe and America, which are our major markets. We expect a bounce back in the specialty polymer business very, very shortly, maybe in the next couple of months, we should be back to normal. Not couple of months, sorry, a couple of quarters. And the capacity overhang as far as polyester film is concerned may take a little bit longer, but we expect to start seeing some improvements very shortly.
So that's Ester Industries sitting with a gain of around 7 to 10%, expecting a bit of a recovery in the specialty business in a couple of quarters. But let me quickly take it across to my colleague Sharad as well to get a dealing room check going as to which is the stock on the dealing room's radar. Sharad.
Well, the dealer buzz in the stocks is Deepak Nitrite, and it's expected that large orders or inquiries are coming from the large customers. Now, importantly, the phenol prices, they are also expected to rise this week. And if you look at the Chinese markets, that's very interesting because they are shut due to the lunar year. And the Chinese phenol prices, they have actually shot up by almost 5% on a week-on-week basis. And importantly, trading in the important levels of $1,100 per ton. Now, it's important that the Chinese lunar year that's expected to close on February 24 itself, with demand also rising, and importantly, channel checks are also suggesting that this could be the final round of corrections and stability coming in the commodity chemicals, which is expected to happen over the next 2 to 3 weeks. Now, importantly, the con call was also there on 16th of this month, and two important things have come from Deepak Nitrite. They have stated that the fourth quarter is expected to see a sequential volume uptick as compared to the third quarter, and importantly, they are likely to sustain their growth rates in FY25 because of the commissioning of key projects which would be there, which would be largely increasing the volumes as well as the margins in the near-term basis.
Thanks so much for that, Sharad. Keeping an eye on Deepak Nitrite. As of now, a bit under pressure, down almost 1%. Pawan, there are a few names that I want to talk about as well, and some of them coming in from the pharma pack, right? So overall, when you're looking at the pharma pack, whether you look at a Biocon, Zydus Life, all these names are coming up. The mid-cap size of the pharma side is also looking quite attractive. Anything if you had to pick out from the mid-cap space, which
side we own Zydus and Syngene in our portfolio. I think both of these companies, doing some very wonderful work as far as new product pipeline is concerned. Syngene in specific case has created some very large capacities for upcoming molecules. The engagement with customers seem to be very promising. So I think that is what we restricted ourselves so far in the mid-cap space. Another company that we also own in our portfolio is Alembic. I think that is one company which has also created a lot of capacity ahead of time. Over the last 2-3 years, these capacities were hitting cost, but revenues were not coming in. Over the next 2-3 years, as revenues start coming in, you will see a big operating leverage out there. Apart from that, what we really like in the pharma space, essentially companies which operate in the domestic market, but unfortunately valuations once again, like as the case with broader market, valuation here also is very, very, very expensive. So we are trying to stay away from those names. So that is how broadly we have placed in the pharma side.
taken. Pawan, you guys have been allocators to the new age tech vertical as well, right? And clearly PB FinTech is doing quite well, and Paytm, at least for now, seems to be out of the woods, at least is holding up with an upper circuit. I think Friday also that stock was blocked in upper circuit. Would you hazard a bet into Paytm at this point of time, and what's the view on PB FinTech now?
See, without getting stock specific out here, the only thing I would like to tell here is that I think RBI governor has very clearly highlighted that they're not against tech, and I think tech will play a very important part as far as the entire BFSI space is concerned. And if you look, despite the millions and billions and trillions of UPI transactions that we've had, I think we've just seen the beginning of it. We have a long way to go. Similar is the case with PB FinTech on the insurance side. I think if you look at the entire tech insure tech market, I mean, with whatever market share PP FinTech has, it's a very small market is there. So take a 5-year view. I think tech side of the business will emerge very strong. I think it's very important, despite after the run up that some of these stocks have seen, and I'm referring to PE fintech. I think it is important for investors to assess the fair valuation of these companies, because 3 or 4 years down the line, these will be companies where the growth rate will be similar to, say, large names like 15-20%. Right, and in that kind of a scenario, would you want to give the kind of premium valuation that they're having now? Is a question that one should assess and one should question, because the current market price clearly factors in all the good things that are going to happen over the next 3 to 5 years. And if growth rates were to taper off after 3 to 5 years, I think valuations are here to compress. So I think that is one thing that investors should be really careful of.
So Deep, I want to talk about a couple of these names, and let's pull up Trent. In the last 1 year, look at the up move that we've already seen in the stock, right? It's last 1 year, the stock has been up more than 200%. Let's talk about ABFRL, Trent, and Arvind Fashions. In this pack, there's no stopping Trent as of now, Sudeep. Where do you see this headed? Would you bet on these other players like Arvind Fashions or ABFRL right now instead of a Trent?
That trend in Trent is very strong. If we see, it is just moving from strength to strength, and even at higher levels now. I guess a fortnight back, the results were announced, and we saw Trent even strengthening from those higher levels also. So the numbers are in sync with the stock price. So in a way, Trent is not overbought. However, looking at the momentum, I feel slight cool off can be witnessed from a technical perspective. But beyond Trent, if we have to choose between Arvind Fashions and ABFRL, I feel Arvind Fashions is still a much better chart. Even in the last several weeks, or even last 3-4 months, for instance, the stock is on an uptrend, and steady buying is witnessed there. But in terms of ABFRL, there is always a case of selling pressure from higher levels being visible. Now, if you see, stock is not able to sustain about 250, 260 levels. So every time it moves there is some pressure from higher levels. So I feel Trent is the obvious choice, but beyond Trent, Arvind Fashions would be the preferred pick ahead of ABFRL.
The recommendations from the retail space and the pecking order at that. Just take a look at Bajaj Auto as well. That stock has been holding up very well for itself. Of course, the record date for the buyback was out. It was announced to be 29 February. The buyback price is much higher than the current market price of the stock. So clearly there's that renewed buying interest which is coming through as far as Bajaj Auto is concerned, sitting at record high levels. Even though it's come off the highest point of the trading session, nonetheless holding up in the green. Bosch is the other one which has made quite a bit of comeback. Within the pharma pack, take a look at Natco Pharma. Since the commentary post the con call, that stock has been firing away. Sanofi India is also doing quite well, and then Novartis India, we have been telling you the kind of gains it's been seeing for itself. Just flagging out some of all-time high stocks, it's Dixon, Sonata Software, Redington forms part of that list. And a view on that one, Pawan?
No, not really. We don't own that stock in the portfolio, and I think we are really believers that companies which don't have a good EV portfolio in the long run, despite the earnings growth, you've seen Bosch valuations getting compressed, and there is scope for further compression out here unless they are able to build a good EV portfolio. So we are right now staying away from that stock.
Staying away from that spot. In fact, on that note, Pawan, we let you go. Good to get you on the show and get your insights on the markets right now. Coal India, that continues to buzz quite a bit for itself. So the e-auction prices have fallen off the cliff. There is a possibility that the company might miss its production target, and that's the reason that stock continues to see lower levels. There's a cut of 5% there. We have discussed this, Naresh, but just come back on Coal India as well as the other metal names that you like right now.
So Coal India has had a one-way run. Consolidation going back to 440, 450 would be normal, and then maybe have a look at it. So in terms of metals, what would be interesting is SAIL, because that corrected from the highs of 150, and 150 was the top roughly back in 2021. And now 120 looks like a base. So on dips, Steel Authority of India, SAIL looks promising. Then Vedanta looks very interesting because that's been consolidating between 250, 55 on the downside, 280 on the upside. And it has not seen any re-rating, whereas the whole sector has done really well over the last few months. So these two names which have been sideways and good enough risk-reward possibilities here. So I'll go with SAIL and Vedanta.
SAIL and Vedanta are better bets, and watching out for those 420 levels thereabout for Coal India. Thank you, Naresh, as well as Sadiq for joining us and taking us through the last hour of the trading session. But that's how we are wrapping up the day. It was a day of fresh record highs, even though we are off it. Let's take it across to Vinny to get a list of all the buzzers that were there in the trading session.
Absolutely, so yes, Nifty not closing at those record high levels which we saw during the intraday move. But yes, on the positive note, Nifty up 0.4% in trade at the end of the day. Similarly for Sensex as well. Let's see Nifty Pharma as well, because that's among the top sectorial gainers, up 0.9% in trade. Nifty Bank too following what the Nifty is doing as well, up 0.4% in trade as well. Other than that, FMCG pack, that's managing to hold on to very good gains as well. And overall, when you talk about the Nifty, let's talk about some of the top movers in the Nifty that we had today. We have Grasim Industries that's leading the charts over there. Strong up move for Grasim. Bajaj stocks, whether you look at a Bajaj Finserv, Bajaj Finance, or even a Bajaj Auto, all of them too are buzzing away in trade as well. So look at them, sharp up move that is seen in the Bajaj Twins as well as Bajaj Auto as well. Other than that, in terms of ICICI Bank, Reliance Industries, those are seeing some very good move as well today. So that is what is pulling up overall at the Nifty today at the end of the day as well. Mid-cap, Nifty mid-cap, where is that holding on to as well as of now? That was also seeing similar trends, following the trend of the benchmark indices as well, the Nifty mid-cap as well as a small cap. And some of these individual moves today that we've seen in the mid-cap space. Paytm surely locked in upper circuit, closing the day with those upper circuit gains as well, up almost 5% as well. Other than that, PB Fintech shares saw a sharp uptick of 7% today as well, after they have received the IRDAI's approval that came in for Policy Bazaar license upgrade, and that is what is keeping PB Fintech a buzz as well. Other movers, whether you have a Dixon Tech, MRPL, as well as Supreme Petro in the space, as well as Arvind Smart Spaces in the mid and small cap, which have been buzzing away as well. Individual movers like IOCL2 buzzing up 11% after the company has gotten a product registration nod from China as well. Novartis India, that's a bit under pressure after the strategic review is underway. LIC, after they've gotten a refund of 21,000 crores, more than that. So LIC is another stock that has been buzzing away in trade with 1.2% gains. Balrampur Chini Mills, let's not forget that. They've made a new foray coming in. So that is the sector that we're keeping an eye out on. Sugar stocks today have been seeing sweet gains as well. Balrampur Chini Mills surely leading the way, 4% gains there as well. But yes, advance decline ratio at the end of the day clearly in the favor of advances versus decline. Nifty closing with gains of 310 to 0.35% as of now. So that's how the market wrap is looking like. But goodbye from Anisha, myself, as well as the team who put this show together.